Hi guys. So in this video, what if I tell you that your money is getting decreased with time? Its value is getting reduced as the days are passing by. Surprised, right? And you might be wondering and shocked that how your money could be decreased with time. This video, the same I'm gonna answer that how your money could decrease with time in its value. So the primary reason by which your money's value decreases over time is the inflation. So inflation is the rate by which the general value of the goods and prices changes. And obviously subsequently the purchasing power of the currency and people falls. So in this video now I'm gonna tell you how it works. So the number one factor in that is the rising prices. So you know already every day the price of the goods and services over time it increases. So let us understand the increasing prices with the help of example. Now for example, the one thing which you could buy in $100 a decade ago might cost you $120 now. So this increase in prices, it basically means that the same amount of money could buy you fewer amount of goods or services now. Now in that the next factor is the reduced purchasing power. Now as the price of the products and services it increases, obviously the purchasing power of the people and the money it also decreases. This basically means that now with the same amount of money you buy fewer or less goods or services which you could have bought in the past. So this is why saving money under a mattress, which usually housewives and all people do, that they save money in particular place in the house, it decreases the value of money over time. So you should never save money under the mattress. Now the next factor is the interest rate. Now the central banks which govern all the banks, this Reserve Bank of India in India, so it manages the interest rates. The banks also they manage the interest rates to adjust the inflation. Higher rates can reduce inflation while the lower rates can spur inflation. So when the interest rates are low, the borrowing is cheaper, people are easily able to get the loans. So because of that, the people's purchasing power, the purchasing tendency, it increases, and which results in the increase of inflation. So increasing or decreasing the interest rates are often one of the major things by which the government or the central banks they control the inflation of a particular country. Now the another thing which impacts the value of your money are the economic factors. Now economic factors such as demand and supply, the production cost and the supply of the money in the market, it also impacts inflation to a certain extent. Now let me tell you this with the help of an example. Now for example, the supply of the money in market it increases without the increase of the goods and services. So this thing will also cause the inflation in the country to increase. What all I've told you in this video, the all factors, now let us understand it with a simple example. Now to tell you a simple example, let us consider that there is an inflation rate of 4% annually in the country. So this would mean that the prices are increasing of the products by 4% every year. Now to give you a daily life example for that, for example, if you have 100 rupees today in your pocket, so it would have the same purchasing power as rupees 96 only a year from now if we assume the steady inflation rate in our country. So in this video I've told you whole factors, all the relevant factors which tend to decrease the value of your money over the time. So whatever amount you have right now, in future you should always assume that its value would decrease only over time. So that is why I always say, and that is the main motive of this channel, the financial literacy and financial freedom, it is very important and an integral part of your life. So now what is the solution for this? Now one solution could be, as I always say, so investing money into the investment options that typically outpace the inflation rate, such as the stocks, real estates And some inflation protected securities are one way by which you can mitigate this risk and by which you can avoid this problem of decreasing the value of your money over time. So guys, now I hope that it is very clear the very first question we have asked in the video, that how your money could decrease over time, how its value could reduce over time. So now I hope it is very much clear to you, and apart from explaining how your money could reduce over time with value, I have also told you that how you could outpace the inflation and the value of your money could increase over time, what steps you should take. So the steps are thus very simple, that you should always invest your money in some or the other assets whose value is going to increase over time, so that the value of your money could beat inflation of the country and could also gain some returns over the time. So guys, that was all which I wanted to tell you in this video. I will see you all guys in my another video. Till then, that is all for this video. Thank you so much guys.